What is going on, you guys? It's BGFX. Welcome back to the channel. I'm coming at y'all with a brand new video, and in today's video we're going to be breaking down a little bit of price action from this previous week on mainly GBPJPY. So we're just going to be basically going through a few different concepts, of course smart money concepts, liquidity, supply, demand, and basically how to get sniper entries. So that's what we're going to be going into. Before I get to the video, we're going to go to my Instagram really quick, and this is going to be the trade here that this video is pretty much going to be revolved around. So of course we have my GJ markup before. I'm going to be getting more into detail with pretty much everything y'all see on the charts right here. Of course we had my first POI right here, and then we had my second POI, and this was before, and then this was after, and price ended up pushing around 90 pips up. Had a nice little rally here and a very good trade opportunity that occurred at this point of interest. Now unfortunately I was not able to catch this trade. Reason being was because it happened during New York session, and I was not able to trade New York that day. I do trade New York occasionally, like I said. Unfortunately I just wasn't able to be on the charts at that time, but I did post my analysis, I did post my markup, and this was my initial bias for the pair. So we're in the VIP channel, and we're gonna go up really quick. This was from last week. This was just a small trade. I believe this trade ended up running a little bit more than 2 times our risk. Nothing crazy. It was like a potential 1 to 7, and it went 2 times our risk throughout this markup here. It maybe went a little bit higher, I might be wrong, but it eventually just came to break me out at break even. And then of course this was this week. I posted my analysis here, pretty much breaking down GJ, what I wanted it to do, and then this was after, where I had 90 plus pips off of my point of interest. I did have 2 points of interest drawn, but I did believe it was more likely we were going to come into the second point of interest, and I'm going to explain why in a second. So as y'all can see, GBPJPY gave a 90 plus pip push off of the POI call last night. Unfortunately missed this setup myself because I don't trade New York session. This had very textbook price action on the lower time frame, and of course you have that 3-minute time frame price action, and this is something else later in the week. But yeah guys, let's go ahead and get into it. So to kind of start this analysis off, the initial trade, right, the initial or not trade, because I didn't actually take this, but I do believe that I can get some good information throughout this video for y'all, just because of how textbook the setup was. So let's get into it. So like I said, trade basically is going to be starting right here. Now based off of this zone here, this is what some people will call an ICT order block, some people will call it demand. Okay, now this was going to be my second point of interest, and this was going to be my first point of interest. So we're going to rewind the charts back really quick, and we're going to go ahead and type out POI, put that in caps, POI number 1, and then we are also going to come to the second one and put POI number 2. Okay, so those are my first 2 points of interest in the market. So we basically have 2 order blocks right here. Now I'm sure most of you guys know, when it comes to trading liquidity, when it comes to trading based around precision, it goes a lot more into detail. You kind of have to dig into the finer details that go beyond just order blocks, because I know order blocks are very popular nowadays, but I'm going to show y'all everything in the grand scheme of things, which led to me looking for buys. So we're going to start right here on April 27th, where we pretty much made the highest point of this expansion to the upside before we started to range. Okay, before we stopped for a little range and then continued up. So all I'm going to do is I'm going to map this range out, and I'm going to draw a little line below these lows. We have pretty much what you can call a little triple bottom here, and what this also means is that is going to be potential liquidity in the market. So I'm going to put this little Bitcoin logo here, and by liquidity we just mean stop losses, and we also mean interest of sellers to take over. So what we see at the beginning of this market structure is we see the range, we see the market pull the high of the range, we see the market retest and then continue up. So we create the range, we pull liquidity, we push to the upside, and we pretty much make what you can call a swing high, right? Pretty much make what you can call a swing high in the markets From there, price gives us a very small break of structure, nothing substantial, but the reason I'm putting this break of structure here is so you can see what happened after. Now we create the break of structure in the markets, and then we begin the range. You can map this range out. You might be wondering, what's the importance of this range? If we go ahead and we look at what happened here, we ended up ranging and we ended up pushing up off the high of the range for around 20 pips exactly. Now when we talk about what structure this broke here, this actually ended up breaking this structure to the left. So what this now does for me is I'm going to put another Bitcoin logo, and what this tells me is that the market ran the high before selling off. It ran the high fairly aggressively. So all I'm going to do is I'm going to map this area out here as a potential point of interest. Now me personally, I did not sell off of the touch of this point of interest, and I'm going to explain to y'all why, even though you could have. So yeah, to kind of break everything down so far, we had our range, we had the market push up, retest, make the swing high, break market structure, range, pull liquidity of the range. This now becomes a POI, okay, and this could have been a point of interest for sales. Now once again, I did not sell GJ. In this video we're just going to be talking about these buys here, and this pretty much kind of ties into it. So once we make the swing high, we begin to trade all the way back to the downside. Now if we go ahead and look at what happened once we made this low, is we can see here that price ended up gapping down Sunday, right? And I'm going to explain to y'all why this holds significance to me in a second. I'm going to go ahead and put Sunday open, right? Put Sunday open, right? So price gap down Sunday, and since we opened up Sunday, the market began to be very bullish. It's not like the market opened up and continued to break more forms of market structure. It opened up, and what we actually did here is we see that transition from the market ranging, making the overall swing high, ranging, pulling liquidity, and then closing below this range, right? We closed below the range, and then from that point, we end up opening up and just remain bullish. So my overall bias of going long in this pair was due to the fact that we started the week bullish and we created these 2 points of interest. Now you might be wondering, how do I decipher which point of interest is going to be more important? Before I do that, I'm going to explain a little bit about what we have here, and then we're going to get into the tool I use for that, sometimes at least. So we go ahead and we map this out, and you can see that we have somewhat of a range. You can see that we made the highs of the range here, and it looks like the market is potentially pulling those highs. And for me, a range is basically looked at as an accumulation, right? An accumulation of orders. I don't really mean I'm sure a lot of you guys know of like accumulation and distribution, reaccumulation, redistribution. When people are talking about Wyckoff, this isn't really the same for me. This is just basically like an accumulation of orders, saying that people might be buying here and then you run price back down, an accumulation in that way of viewing things. So I'm just gonna put accumulation, right? Accumulation, and then from that point we have this point of interest, and you can go ahead and say that this high here can be looked at as potential liquidity. What do? We come back up, we run the high, and then we begin to show reaction, and you can see that this test here came back down into the demand in the accumulation. So from this point you can see that we begin to melt very strongly. Now I'm going to bring price back really quick. We're going to go ahead and bring this, and we're going to come all the way back down into this swing low here. And I'm going to show y'all a tool that I actually like to use when it comes to me looking at potential areas of value. Now once again, the reason I'm using this tool, which is called the volume weighted average price, is because it's similar to a moving average. It doesn't get its data like a moving average, okay? What this does is it combines the movement of price, it combines price with the volume of its movement, okay? And basically what we see here is that it's following through with the bullish trend. Now since we started the week very bullish, it only made sense, right, that since our VWAP is here and we actually have the the gap between our VWAP and the point of interest, we can see that if price was to come lower, you know, since VWAP basically follows an average movement of price mixed with volume, if price was to begin to come down, we would see something like this, and we would now have more than one confirmation to potentially look for buys. Now, me personally, I like to use the 1 minute when it comes to entering my setups, and I'm sure you guys realize that. So that's back to what I was saying here. Even though this was a point of interest, I did not get a trade, because if we come up to the 3 minute, you can see that all we did is we traded up into it and we literally melted off. So for me personally, I wasn't able to get an entry. Now, some people, what they'll do is they'll place pending orders, or maybe they'll enter on market execution, and they'll look for no 1 minute structure. Now, once again, this goes back to, you know, asking yourself, you know, what works for you, because everyone has a different personality. Some people are okay with entering on a 30-minute POI or a 30-minute order block, 30-minute demand, without using the 1 minute. Me personally, I like to use the 1 minute, and I'm okay with missing these setups like this to go with what meets my personality more. So you'll see right here how we begin to trade into this first point of interest, where I potentially would have been looking for buys at. So what I like to do here is, since we're now breaking the low, pulling liquidity from this little line that I drew, I would then ask myself, you know, what are we actually doing when it comes to market structure on the lower time frame? If we look at what we got right now, you can see that we really have no reason to look to buy. In the grand scheme of things, price retested the zone, is coming up slowly, but we don't really have any type of break of market structure. We don't really have candle patterns that I look for. Any type of pattern recognition that comes with the way I trade, it's not something that I'm seeing in this zone. And then what do we see? We see price begin to melt back to the downside. Now, coming back once again, I know that I have the second point of interest here. I know that my volume weighted average price is in confluence. So once we begin to trade down into this area, I'll then be looking for buys once again. And if price does not show me buys here and it wants to continue down, that'll be okay, right? And then from that point, I would shift my bias from us trading down, opening up bullish, mitigating this level and continuing up, right? I would change that into, okay, now we're pulling liquidity from the weekly open, potentially showing us that we might start the week bearish, and then maybe at some point we'll touch a point of interest over here. But until that happens, I'll be following through with my bias, right? So if we go ahead and we press play, let's go down to the 5 minute time frame, and we would basically just be watching price throughout this area. Now you can see that we begin to trade down here. I'm gonna go down to the 1 minute time frame right now, and I'm basically just gonna be watching price around this area. Okay, so just seeing, you know, looking for patterns that I typically like to trade. Okay, so now we begin to see price come back up right here on the 3 minute. We do see that we have this first break of market structure. Right, we had this break of market structure. Come back down to the 1 minute. Also have more break of structure. Now what you can do is you could put BOS or BMS, very similar. So we have that break of market structure here. We also have another break of structure, and then from that point, right, if we actually look a little bit closer, you can see that we do have 1 minute demand coming off of our point of interest. So I'm actually just going to change the color of this really quick. We're going to come right here. You can see that we do have this 1 minute demand. Now if I go ahead and refine into another level, I would basically come right here and I would put refined demand, and I would potentially look for price to come back down into this level, right? And I'll go ahead and put a little logo. Sometimes I like to put a little sniper logo, right? And I would then look for a trade coming back into this level. Okay, and once again, this is all happening on the 1 minute based off of everything we have lined up beforehand. Because remember, when you're trading a 1 minute, you always want to make sure everything is lined up, because when it comes to you buying in a market that looks something like this, right, seeing how it's very, very bearish, you want to make sure everything is very calculated when it comes to you actually meeting up, with the right time to enter with price, especially if you're using, 2 pip stop losses, 3 pip stop losses. You always want to make sure there's reasoning behind it. So you can see how we begin to push up, and all I'll be doing here is I'll be looking for buys. I typically, for me, it really depends. It depends how candles look, but I'll probably do this about halfway through. And then my stop loss will be at this previous low here. And like I said, this isn't a trade I took. I understand that it's very easy to explain these things after the fact, but I just want y'all to know, especially for any type of newcomers, that I do have a lot of videos explaining trades that I've taken, to where I show the entry, that I show the signal and things of that nature. Like I said, the reason I'm kind of making this video here is because it's so textbook that I feel like a lot of people can learn something from this here. So once again, when it comes to the entry, all we see is this breaking market structure. We see the first demand created. We see refined demand, which will be there for the entry. And then in terms of my targets, right, all I would do is I would look up here at previous swing highs, and I'll also look at this area as a whole, right, this little swing high here as well. And then I'll come up to my sessions, and you can also see that this was London's high as well. So this could be another target, since we're now, let's see what time it is in a second. We'll see what time it is during this back test. Right, this was around 8 o'clock. Right, this was around 8 o'clock. So entry would have been here, and all I would do is I would then watch price. Stops right there at the low. Okay, and then now that we see bullish reaction, I'll put another line here, and this would be a pending break of market structure potentially coming. We'll see what happens next. Right, and then we see how we retest. What we actually do is we retest this level of structure here, breaking market structure. Next thing we do will be coming up here. You can see that we have little 1 minute time frame equal highs. And me personally, when it comes to my take profit, what I would most likely do is I wouldn't target the high, just because of the nature of where we made this high from. You can see that we made this high off of this candle that pulled liquidity. What that could tell me is that it is possible that if the market was bearish, we could set up for sales there. So what I would do is I would target it most likely right here above it, and I would move my stop just a little bit below that wick, and that would put me at around a 1 to 10. Let's go back down to the 1 minute, and this would be my overall entry. Let's go back up to the 5 minute real quick, and we'll let it play out. And let's see. From that point, we're still ranging, coming down a little bit, and take profit will be hit. Okay, now when it comes to the overall London session high, if you want, you can target that next. Let's just see if that will hit as well. I'm pretty sure it should. And then take profit will be hit there as well. So it all depends. It's all about understanding, these different forms of structure and potentially where you want to target. So we're going to go back up to the 30-minute time frame really quick, and to kind of explain this overall trade, right, I'm going to go ahead and shade this up. I'm going to change the color of this. And when it comes to the overall structure of what happened here, understand that everybody's going to look at this different. Some people would, turn this into like a Wyckoff view of things, and some people look at this as basically like just a normal range. Me personally, like I said, we started ranging at this level. You might be wondering, why did I start it at this level? If we come up here, you can see that no structure was really created until we broke this high, and that's when we began to kind of give structural shifts. Before that, it was literally just break and retest, break and retest, break and retest. So there's not much of too many schematics and too many different liquidity pools, things of that nature. You can see that price was just very bullish. Now, if we ask where this bullish movement started from, you can see that it was from here, right? And you could have been looking for lower time frame buys right here, and all we were doing was looking for a continuation of that overall movement. So we had the range, we pulled the swing high, We pushed all the way to the downside, closed below that range, pulled liquidity, opened up Sunday, started bullish, created 2 points of interest, used the VWAP for confluence with my POI. From that point, look for lower time frame confirmation, break a market structure, refining demand. You can refine order blocks as well, target previous highs, London session. You can use your Asia highs and lows as well, but that's something for like another video. But that would pretty much be it, right? This will be around a 1 to 10, give or take. And we're also going to take a quick look at Euro USD, because this was NFP week that just passed, and I was watching Euro USD. This was a pretty solid setup. Me personally didn't take it. I'm not really someone who trades NFP. Not really my style, unless I'm doing it maybe on like a challenge account. Sometimes I'll do challenge accounts every now and then, just because doing a challenge account honestly is something I recommend to pretty much any trader, anyone who trades with live funds. When you have a challenge account, it lets you get everything out your system. You know, if you want to take a crazy trade, you can do that on a challenge account and just let you get everything. It lets you get all that out, right? And if I would have still been doing my challenge account, I would have probably took it, but this isn't really something that I mess with typically on NFP. So you can see that we had this little range here. We pulled the low of the range, testing this here, testing this little area, give or take, which could be potential demand. We pushed up very strong, and then we begin to pull back into that area. Once again, combined with the volume weighted average price following through with the bullish trend. If we come up to the 30-minute, right, you can see that I used fixed range volume, which basically just took the average of the most volatile price and put it in this area for me, and that's where I would have been looking to target if I would have went long on EU. But once again, I'm mainly focused on GJ, occasionally GU. This week I kind of expanded my watch list and started looking at UCAD, Euro JPY, things of that nature. And if you're wondering like why target the point of control when it comes to using fixed range volume, well, it's because the way I like to look at it is if I was to bring the chart back here, and if I was to ask myself where does the eye, get recognition of a pattern that they would like to enter the markets, and most of the time it will be here. Most people would probably consider this a potential area of supply, and most people would want to trade it. So instead of me trading it, I would be targeting up to it, which I know would then be an area of high trading activity, and of course the market likes activity. So that's kind of how I would look at it, and then coming back to GJ, like I said, we pretty much went through this pair, right? The accumulation, London session high, POI number 1, POI number 2, Bitcoin pulling liquidity, swing high, things of that nature. So that is pretty much it for this video, guys. I hope y'all did enjoy. Let's make sure to get ready for another fresh week. It's been BG, man. I hope y'all enjoyed. I will see y'all later. I'll be back again with another video soon. I'm out. Salute.
Ayo, God, this is crazy.